Good morning. This is Manu Walia from Continuum Global Asset Management, bringing you the market commentary on August 16th. More than a market commentary, this morning is about an observation that I made. I was reading the Wall Street Journal and I came across this very interesting article talking about the Chinese gross domestic product getting better than that of Japan on a net basis. In other words, if this pace continues, then China could be the next biggest economy after the United States. So over the last decade or so, China has gone from being, I think, the 8th or 9th largest economy to being the second largest. I think this speaks volumes of where we're headed. We all talk about global trade and globalization, but if you review the top 14 countries as far as the GDP is concerned, and you do some analysis, you'll come up with very, very interesting numbers. Now, the United States economy is about $15 trillion. Out of the top 14 economies, if you took just the 7 emerging economies like China, India, Russia, Brazil, Australia, Mexico, South Korea, and you looked at their combined GDP, if you mashed them all together and if you looked at their total GDP, that would be about 13 or 14 trillion. So let's call it pretty close to the GDP numbers of the United States. The interesting fact is that the total population of United States is about 320 mil. But if you looked at the total population of the top 7 emerging countries, it's close to 3 billion people. Now, I'm not saying that all 3 billion people are consuming or will consume at the rate of an average US consumer. But if you look at the comparison, you've got the GDPs of the 7 emerging countries equal to the GDP of United States, but the population is 10 times. Also, you know, and it's a fact, that the GDP growth on these countries, China, India, Russia, Brazil, is growing at 2 or 3 times that of the United States. So if you look at from a plain and simple economic perspective, the growth perspective, you will see that the potential over the next 5 to 10 years with these countries is tremendous. I will say another thing that you may or may not agree with, but when it comes to investing in the globalization phenomenon, I don't look at China specifically or exclusively, or India exclusively. What I look at is what countries and what companies are involved in global trade and how will they do going forward. So I'll give you an example. I don't think that there is a lot of difference between, let's say, a company performing or based in the United States known as Citigroup, or a company in the same sector based in Europe, let's say Credit Suisse, or an Indian bank known as State Bank of India, which is one of the biggest banks in India. So the 3 companies which are based at 3 different geographic locations but are benefiting from the same concept, globalization. Similarly, you can look at Microsoft, based in the US, or you can look at Infosys, based in India. You can look at Chevron, a US company, or you can look at Petrobrasilia, based in Brazil. The point I'm trying to make it is that we should walk away or look away from the short-term 5% loss in the broad-based indices or a 10% gain. Overall, the way the global world is evolving, it is providing and it will provide such huge potential for global companies that we cannot even fathom. Having said that, if you'd like to talk in detail about this or have any questions or comments, please send us an email or contact us directly. You can get all our contact information at www.cgamadvisor.com. Thanks for listening and happy trading.